Hey everyone, and welcome back for another deep dive. This time, we're going to be talking about Kenyan pension and provident fund taxation.
Right.
We found this really interesting document uh, all about it.
Okay.
So if you're working or living in Kenya, this is definitely for you.
Yeah.
Um, or if you're just interested in international finance,
Mm-hmm.
it's going to be a good one for you too. So let's dive in.
Let's unlock these secrets to get the most out of your pension benefits and stay on the right side of the tax man.
Okay, so first question. How are pension contributions taxed in Kenya?
So, when your employer contributes to your pension, it's actually considered taxable income
Really?
for you right then.
So I'm being taxed, like
But-
before I even see that money.
That's right. Yeah.
Wow. Okay. That seems a little.
I know it's a little counterintuitive.
Yeah. So are there any ways to like lessen the blow?
Don't worry. There are some ways to optimize this.
Okay. Tell me more.
Okay, so let's say you opt for the monthly pension annuities. The first 300,000 Kenyan shillings you receive every year as a monthly pension is completely tax-free.
That's pretty good.
That's a good chunk.
Yeah. What if I would want it all at once?
Good question. So if you go for the lump sum withdrawal, it's a little bit different.
Okay.
The first 60,000 shillings for each year of service, up to a maximum of 600,000 shillings, is tax-free.
Okay. So it seems like timing is pretty important.
Timing is everything. You could save a lot of money.
Yeah. But by being strategic.
Sure.
This is where it gets a little more interesting.
Yeah.
Any contributions made before 1991 are completely exempt from taxation.
Wow. So that's like hidden treasure.
It is like hidden treasure
That's true.
in your pension pot.
Wow. Okay, what about people who are nearing retirement age?
Another good question. So employees age 65 and above enjoy completely tax-free pension income,
Really?
both lump sum and monthly.
Wow, so that's great.
Yeah.
You've worked your whole life.
And
So
don't
you
you
need
get rewarded for your patience? Get a nice little tax break. Okay, but what happens if I want to withdraw more than those tax-free limits?
Okay, so anything exceeding those limits
Yeah.
is subject to withholding tax. But the good news is that this is considered final.
Okay, so just a one-time tax settlement.
That's it. One and done.
Okay, so we've talked about individuals. What about the companies?
Oh, yeah. That are managing these funds.
Yeah.
So if a company receives surplus funds from the pension, it's actually counted as their taxable income.
Oh, wow. Okay, interesting.
It is. So
Yeah.
the companies need to be smart about it.
Yeah. Okay, so anything else to watch out for?
Yes. The time of your withdrawal can really make a difference in how much you're taxed.
Okay.
So if you withdraw before 15 years, you're going to be subject to a progressive tax system.
Okay.
So the tax rate increases as the amount you withdraw goes up.
Oh, so the more you withdraw, the higher the tax.
Higher the percentage, yeah.
Okay. Can you give me an example?
Of course.
Yeah.
So let's say you withdraw before 15 years.
Yeah.
That first 288,000 shillings is taxed at 10%. The next 100,000 shillings is taxed at 25%.
Okay.
And anything above 388,000 shillings is taxed at 30%.
Okay. That's a big jump.
It is.
Is there a way to avoid that 30%?
If you can wait until you've contributed for at least 15 years, or reach the age of 50,
Okay.
or retire due to health reasons, you get a more favorable tax structure.
Oh, okay. So patience pays off.
Patience is key when it
Yeah.
comes to pension.
Yeah. Okay. So this has been a very informative deep dive
That have.
into Kenyan pension taxation.
There's a lot there.
Yeah. But
I think we learned a lot.
I think so too. So listeners, here's a final thought. Given what we just talked about, what steps can you take today to make sure you have a financially secure retirement in Kenya? Thanks for joining us on this deep dive, and we'll see you next time.
See you next time.